And welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Monday, June 15th, 2020, and I'm pre-recording this Trading Places Live for Tuesday, June 16th. Futures are higher this evening. We had a big recovery on Monday, and currently we've got Dow Jones futures up 100 points as we look ahead. Of course, a lot can change overnight, but I was pleasantly surprised by the nice rally off of the big red futures going into Monday morning. We saw pretty decent action on Friday. Of course, we had the gap up, we pulled back, and then we rallied again into the close last couple hours. And then after a gap down on Monday, we saw recovery throughout the day as well. So buyers do still seem to be out there. Volatility index pulled back. So I think there were some positives going on. Want to go through some of the things we're going to talk about today. Of course, we'll get into that daily market recap in just a couple minutes. I'm going to go through talking technically, and I thought I'd take a look at a couple of pairs of stocks, and also take a look short-term versus longer term, because sometimes we get swayed looking at the short term. We get talked out of a stock or maybe even into one, and then when you look at the long-term chart, you see a different picture. So I want to take a look at that and focus on that a bit today. Going to get into a scanning session, just talk a little bit about one of the scans that I like to run. I don't like to chase stocks. I like to get stocks in a pullback. So there's a scan that I'd typically run against one of my chart lists over at Earnings Beats. So I'll go through that. Then we'll talk a little bit about the earnings. A couple of stocks reporting later this week. One that reported this evening on Monday, beating earnings expectations. Take a look at that chart. And we'll wrap up the show with the three you must see. And these are going to be three healthcare stocks. And I know healthcare hasn't been doing very well. In fact, it's been doing pretty poorly on a relative basis. But these are three healthcare stocks actually making breakouts. I thought that was interesting given the backdrop of a weak sector. So we're going to get into all of that in just a minute. First, I want to just point you to earningsbeats.com. You can subscribe to our free Earnings Beats Digest newsletter. Just simply enter your name and email address, hit subscribe. And on Monday, Wednesdays, and Friday mornings, we will make sure we get that newsletter out to you. Usually it's just a couple paragraphs talking about a particular stock normally. Could be an industry group, but for the most part, it's a stock relating to earnings in some fashion or maybe relative strength. But usually it's an educational type of newsletter. I think you'll enjoy it if you haven't tried it. So you can sign up, and then if for any reason you want to unsubscribe, you can unsubscribe when you get the email. We give you that option all the time, and if you do unsubscribe, we will unsubscribe you. No problems there, no questions asked. But I think you'll enjoy the newsletter, so give it a shot. All right, let's take a look at what happened on Monday. First of all, the Dow Jones Industrial Average in the early morning action was down several hundred points. We were down close to 1,000 points overnight. And so it looked like it was going to be a really rough start for the Dow. And when you consider we went down 1,800 points last Thursday, that I'm sure had a lot of traders on edge. I was certainly nervous about, what might transpire in the near term. But we came off of those lows in the pre-market hours and opened not quite as bad as it looked like we might in pre-market. And then we rallied, and we rallied pretty much all day long to the point where we had all of our major indices in positive territory, led higher, as you can see over here, by the small cap group. Small caps, S&P 600 small cap index up more than 2%. Mid caps and the NASDAQ both up close to 1.5%. S&P up about a little under 1%. And the Dow Jones Industrial Average up 0.62%. It might not seem like a lot, but when you're down 700 points, being up 157 at the end of the day was a pretty big turnaround. So all in all, I would say it was a good day for the bulls. Nice recovery. Glad to see the buyers step back in. From a sector perspective, communication services leading. Normally when we see communication services leading or among the leaders, I'm also looking for technology. But I don't see technology anywhere on here. Today it was just communication services, along with a few groups that really hadn't performed very well. You can see communication services has been strong for the past few months. Financials really began to strengthen here in the early part of June, maybe the latter part of May into June. Same thing goes for the real estate group, staples, and materials. So it's kind of weird seeing this combination leading action to the upside. But I will say all 11 sectors rose today, and that is good news. 10-year Treasury yield. First of all, Tuesday morning, be on the lookout for retail sales. May retail sales will be out. In April, they were down 16.4%. In May, they're expected to increase 7.5%. Quite volatile. It's going to be very difficult to see what's going to transpire here and what the actual number is going to be. But that could be a driver for what takes place in the market on Tuesday. So make sure you check that out. Also, May industrial production and capacity utilization will be out. Big drops in both in April, but in May, we're actually looking for quite a good rebound, especially on the industrial production side. In April, that was down 11.2%. In May, we're expecting an increase of 2.9%. So again, big rebound, or at least the market's expecting that. 10-year Treasury yield after the huge rise last week and maybe even into the tail end of the week before, really had that huge move up last week, though. It was all heading back in the other direction. Well, today we started moving up again. So hopefully we have put a low in. 0.65% has been a pretty good area of support for about the last month on the 10-year Treasury yield. So hopefully we hold that, move back up above that 20 and begin to trend higher again. That would certainly be good news for financials and industrials. So watch for that. All right, let's move on. Talking technically. And I thought what I would do first, I'm going to show you a couple pairs of stocks. First is going to be Roku and Netflix. Haven't talked much about Roku of late because Roku's struggled. And when we look at it on this relative chart here, you can see that Roku went through a tremendous period of growth back in 2019 and completely outperformed Netflix. And for the most part, this relative strength was above the relative 20-week EMA line. And starting back in about December of last year, we went below that 20-week EMA, the relative 20-week EMA. And if you look, we've been holding beneath it. So really for about the last 7 months, Roku has been a stock that you've wanted to avoid relative to Netflix. So if you're looking at the two of them, I would say Netflix has been the better candidate. And what's interesting is when you look at a stock like Netflix on the daily chart, and you see it, went up and set the high in mid-May, but it's still well off that mid-May high. And the S&P 500, if you look at the S&P 500, from mid-May to mid-June, we had a straight move up. So Netflix was not participating. Not only not participating, was actually selling off during that period. And so pulling up Netflix and then looking at it on a relative basis, let me try this again. That didn't come up. So if we look at Netflix and then we go to the relative basis, you can see the last 2.5 months relative to its internet peers, it's been coming down. After a triple top, it's been moving lower relative to the S&P 500. So you look at this chart and you might come up with an opinion that, hey, Netflix is not exactly a stock that you want to own. Except when we go to a weekly chart. Daily chart, we went up, but the last 30 days, we've seen a lot of underperformance. So what does it look like on a weekly basis? Well, when we look at a weekly basis, we see a stock that went up to about 400 back in mid-2018, consolidated really for the better part of 2 years before breaking out in April above that actually it was maybe 420 was that key resistance area. And on a weekly basis, we're still holding above the rising 20-week moving average. I actually think Netflix looks absolutely perfect on this long-term chart. So yes, in the short term, Netflix has been consolidating. It's been underperforming. But when you look at the long-term picture, I think Netflix looks really good, and especially when we pull it up versus something like Roku, where we are above that 20-week moving average. Roku's been trading beneath it. And so I think as long as that continues, then I believe Netflix is the way to go if you're looking at those two stocks and trying to decide. Similarly, I looked at Target versus Walmart and was wondering, how those two might stack up. And when you look at it, you might say, well, over a period of time, this is a 5-year chart. It's kind of gone back and forth. But I look at it and I see Target had downtrended relative to Walmart back in latter part of 2015 throughout 2016 and 2017. And since then, since putting in this relative bottom here, I see a relative high, a higher relative low, a higher relative high, a higher relative low, and now we're trending higher again. So I would make the argument really over the last 2 to 2.5 years that Target has been better than Walmart. And I'd maybe be looking for this relative breakout. Now, when we look at Target on a daily chart, you might say, well, you know, the PPO is below that trigger line, you know, moving lower. So it's been losing momentum to the downside. You know, just like Netflix, you know, had a high in mid-May, but, you know, it's been down quite a bit while the S&P has been rising. So maybe you would say Target's not really, you know, what I'm interested in. But stretching it out, looking at a weekly chart, I think you again see a completely different picture. You've got Target, which had been moving straight up in 2019. This is a stock, pretty good sized stock that ran from 57 to about 130 in a year. That's not easy to do in your company this size. But it pulled back. I think that was just normal profit taking. If you notice, the breakout that we saw here was above this double top around 86, 87. When we had these lows, we went just a little below 90. So all we did really is approach that key support level before turning back to the upside. So I think from a longer term perspective, Target looks good to me. It's consolidating and it may continue to consolidate. But if you're a long-term buy and holder, I see no reason to bail on Target. I actually like Target here. And I actually like it better than Walmart. All right, let's keep moving on. I want to move to scanning. And so here's the scan that I like to run. And this scan syntax here, by the way, we have a scanning page at our website at Earnings Beats for our members. And you literally can copy our scan syntax and just come in here and just drop it and paste it. And so the highlighted area I'd show you here is what we have over at our website. So you literally can just come in and drop it. And then I added scanning another filter. I added this strong earnings chart list because this is an organized chart list. We do our homework, find companies that beat top and bottom lines, beat Wall Street estimates. And those are the companies, if they're showing also good technical strength, they go on to into this chart list. And then periodically, I like to run scans against the chart list to try to find good, solid reward to risk trades. So when I put this together, and if you look at this and just read through it, daily high is greater than yesterday's daily high. So visually, we went higher today than we did on Friday. Well, when I say today, Monday, because this is, again, being pre-recorded. So Monday's high was greater than Friday's high. And Friday's high was less than Thursday's high. And Thursday's high was less than Wednesday's high. You can kind of see where this is going. Wednesday's high less than Tuesday's high. Tuesday's high less than Monday's high. And Monday's high less than the prior Friday's high. So what we were looking at is a handful of days, essentially, where lower highs are going in. So you've got a downtrend in play. But this part is saying today's high is actually higher than yesterday. You can't really start an uptrend, not just in theory, but in being practical. You can't have an uptrend until your high is higher than the prior day's high. You've got to reverse that downtrend. So I call this my downtrend reversal scan, and I'm looking for stocks that have been printing lower highs for several days and now shows a higher high. That does not guarantee us that it's going higher. It doesn't guarantee us that trend to the downside is over. What it does tell us is that it's very possible that this is starting an uptrend, because again, you can't have an uptrend until you get that higher high. And that's what the scan is telling us. So when I run this, first I always run, syntax to make sure that the scan is set up properly. So you can see right here, your scan syntax is correct. So now I can click the run scan and see what kind of results I get. And there they are. So I've got 9 stocks on here out of 289. So I've got 289 stocks on my strong earnings chart list. 9 of them meet this criteria. Not very many, only 3%. But if these are 3 that have been pulling back and could present some great opportunities, I want to be aware. So let's drop these into a chart list at StockCharts. So I'm going to just pull it into my pour it into my scan results other folder. And there they are. And so you can see how they performed today. And we can also drop them into a 10 per page, and we can go through them one at a time. So Amcor, look at this, nice breakout above this prior high. Volume's pretty good. Pulled back to the 20-day, but we had 5 days in a row of lower highs. We eclipsed that on Monday. We actually put in a higher high. So we ended that downtrend, at least temporarily. But the fact that we are now down around this 20-day moving average, and we were in an uptrend. PPO was looking really good. I think this pullback is an opportunity down near price support. It wouldn't surprise me to see AMKR rally from this area. CyberArk, this one not as much. I'm not really a fan. This one went up, it broke out. Volume was heavier though on the way back down than it was on the way up. Couldn't quite get back up through this gap resistance zone, rolling back over. I don't know, I'm just not really feeling it. And they're not all going to be, just because they come back on the scan result doesn't mean that they're automatically a buy. I still want to review the chart. I want to look at the reward to risk. I want to see, whether or not I like it. If I do, where would I get out if it went against me? Because I want to be able to calculate that risk. If I know how many dollars potentially I'm willing to give up, I can kind of back into how many shares I want to trade based on how many dollars I will lose on a trade. So for instance, if this stock, for whatever reason, let's say, you want to risk $5 on it. So say at 165, that's not exactly what I would do here, but just to make the math easy. Let's say that for LH, 165 was our level and it was trading at 170. That's $5 I'm willing to risk. Now, if on all my trades, I don't want to lose $500, more than $500 on a trade, then what this tells me is that I don't want to buy more than 100 shares. If it's sitting at 170 and I'm willing to give it $5 to the downside for $500 loss, then that tells me the most that I can trade here is 100 shares. Now, you might multiply 100 shares times 170 and say, well, that's $17,000. I don't want to put that much in. I only want to put 10,000 in, or I only want to put 12,000, or I only want to put 5,000, 2,000, whatever. That's fine. But the max number, again, you're trying to look at how much you're willing to risk on a trade. The max number would be 100 shares. If you're willing to give up $5 to the downside, if you think that is as far as you're going to give it to the downside, then 100 shares is your max number of shares to trade. And so sometimes I'll tell members, hey, I think this is a great time to be more cautious in the market. So what that would tell me is that if I went through this same process and I say, hey, I can buy 100 shares. Oh, but wait a minute, Tom's saying, we want to be a little bit more cautious. Maybe I'm only going to buy 50 shares because the market is maybe it's more volatile or, a lot of whipsaw. That's the way I approach the market. I look at the overall market and I develop a general trading strategy, and then I get into my more specific strategy by running these scans against my chart list and finding some solid reward to risk candidates. All right, Paylocity. This one came down a little below the 20, but this was right where it broke out from. That 124, 125 area right in here, we tested that many times. Finally broke above it. Look where we come down to, 124, 125. This would have been an easy one for me to think about even before I saw this reversal back to the upside. I actually, like to buy stocks when they're at support. So Paylocity looks good, but after the reversal, you'd have to calculate, okay, how far do I think it can go up? What's my target? How much risk do I want to give it to the downside? And then you want to make sure that that reward to risk is at least 2 to 1. But I'm going to say minimum for me of 3 to 1 or 4 to 1. And what I really like is about 8 to 1 or 12 to 1, because you don't have to be right very often when you get those kinds of odds to make money. PNC Financials or Financial Services. Banks, I'm warming up a little bit to the banks. I thought that was a pretty nice breakout. We came back down to the support area. A lot of resistance around 105. We did have this one move to 110, but you can see a lot of resistance around 105. And we went right back into this gap support zone and then reversed off of it. PNC looks pretty interesting to me. Live Ramp might be my favorite. Now, I'm an aggressive trader. So, and this is a pretty aggressive stock. It was down under 24 in March, went all the way up to 50. So you're talking about a stock went up 100% in 2.5 months. It's going to have periods like this where it pulls back, but after many days of putting in lower highs, it finally put in a higher high. And I think it's got room up here, 50, 51, maybe even to test these other highs, 54. I think it's got a lot of room to the upside. I loved this candle right here with the heavy volume. That was a earnings related move. And I think we pulled back into this gap support. Now we're reversing back to the upside. So I think ramp looks really interesting, but it's going to be more aggressive than some of the others and a little riskier. Got to make sure you're comfortable with that. And then Redfin, RDFN, I really like the move off the 20-day. You can see that's been an area where the stock has been bouncing. It's got a history of bouncing when it gets to the 20. So once again, at today's low, might have been better than waiting for a new high to print. This one actually pulled back right to a key area of support. Also notice when it came down, you don't really see much in the way of filled candles closing below the low. Instead, it's mostly gap downs. And so, I don't know, seems a little orchestrated, manipulated to me. I think the stock goes higher. SAIA, this one got a negative divergence here, higher price, lower PPO. So I'm a little concerned there. I wouldn't be surprised to see more sideways consolidation. So I'm passing on that one. Union Pacific, UNP, pulling back. This one doesn't look too bad to me after pulling back from 185 on this false breakout here. We went all the way back down essentially to the breakout area and close to the 50-day moving average. I wouldn't be surprised to see Union Pacific make another run toward 185. So that's just a quick idea of how I go through a scanning process, running this scan against my strong earnings chart list, coming up with 9 solid candidates, and then trying to figure out from a trading perspective and strategy which ones might make sense for me. All right, earnings spotlight. I want to go through first Lennar. Lennar reported after the bell this evening. Again, if you're tuning in late, this is being pre-recorded on Monday night for Tuesday's open. But you can see Lennar currently down 78 cents, 1.25%. Had a big day, though, on Monday. Big reversal. Didn't break out, though. And so we've got a lot of good news built in heading into the earnings report. They did beat. They came in at $1.65 versus $1.29 expected. But a lot, again, has been built in. We were near the highs when the news came out. So this could be a buy on rumor, sell on news kind of event. But I do think if we were to get back into the mid-50s, I think Lennar would be a really strong buy. I can't overlook the fact that these home builders, with the Fed coming out last week and saying that, hey, we see rates staying near zero through 2022 and into 2023, that is nirvana for home builders. I mean, you can't ask for a better backdrop than having interest rates near zero. So I've got to believe that's going to help these home builders. And so let's watch for a breakout. But in the meantime, any kind of a pullback, mid to upper 50s, I think would be very interesting on Lennar. All right. I also want to talk a little bit about some companies that will be reporting later this week. One is Oracle. Oracle has been sideways consolidating now for about 2 months between 51 and 55. I have a feeling it's going to break one way or the other with its earnings report. I don't know which way, but lately it's been a buy at 51 and a sell at 55, maybe even 54. So it's been in this pretty narrow range. Let's see what happens with its earnings. It's going to be interesting. H&R Block, HRB. This one's been uptrending, which is good. I'm going to pull this up on a relative basis as well. But when you look at it, its peers have been rising, and HRB on a relative basis has been rising simply because of its peers. It's not leading its peers. It's not really leading the S&P 500. So I get nervous when I see that heading into an earnings report, because if Wall Street was on board, you would be seeing relative strength. When you don't see relative strength and it's been in this lengthy downtrend, I get nervous, especially when it's rising into its earnings report. So be careful here with HRB. Kroger, KR. I think it was last Thursday when everything was going down. Kroger, I believe, was the only stock in the S&P 500 that went up on Thursday. Pretty good company, just yourself. I thought that was interesting. And you can see earlier in the day, it was actually trying to break out. And now we've had a couple of good days and Kroger's been going down. So I'm not really sure what to make of that, except that this has been a stock that has been doing pretty well relative to its peers. And yes, it's been coming down versus the S&P 500, but it's mostly because its peers have been so weak. So it's just kind of going for the ride, along for the ride in its peer group. And so this one, I wouldn't be surprised if you saw a little bit of a positive response to its earnings when it comes out. We'll see. Another big one that's going to be very interesting, Carnival Corp. Carnival, CCL. I tell you, I don't know what's going to happen here. I really don't know what's going to happen. I know that they're starting to report that more people are booking cruise lines, but it's not anywhere near what it was before. And the price, even at the recent high when it was on fire to open June, it still was nowhere near where it was back pre-pandemic. So this group, you got the cruise lines, you got the airlines. I just don't trust these groups. I've got to see a lot more out of them. I think there's so many great areas of this market to trade that I just don't want to play this roulette wheel. And that's really what I look at these cruise lines and airlines like. I kind of view them as a roulette wheel right now. Not really sure what might happen. I can wake up to them being up 12% or down 12%, and that is impossible to control. I mean, I just can't control my risk. All right, let's keep moving on. How about the 3 you must see? These are 3 stocks in the healthcare space that I mentioned earlier breaking out. First one up is STAA Surgical, STAA. And I'm going to pull these up on a relative basis too, because I want you to see the relative strength here, because this is in the medical space. This is STAA Surgical relative to the medical equipment group, breaking out to new highs versus the S&P 500 breaking out to new highs. Look at medical equipment relative to the S&P. It's going the other way. So STAA Surgical, very, very strong relative performer. Volume trends are good, and it's making the breakout. I like stocks like this. I think this is one to consider. Next up, how about Ocular Therapeutics, OCUL? Once again, on a relative basis to the pharmas. Look at pharmas relative to the S&P. They have been horrible. This has been the worst part of the healthcare area. And yet Ocular is performing very well against both its peers and the S&P 500. Volume was picking up on Monday as it made this breakout, closing above $8, taking out that prior high back in March. This one could run, something to keep an eye on. And then the last one, MNTA, this is Momenta Pharmaceuticals. This was a stock that was really leading biotechs. You can see back in the early part of 2020, and then that really led to a lot of outperformance versus the S&P 500. Biotechs were outperforming the S&P 500. And then now recently, we've just kind of gone into this consolidation mode. It's been consolidating. MNTA has been consolidating versus its peers, versus the S&P 500. Biotechs have been, kind of going sideways versus the S&P, maybe a little bit of weakness here in the last 4 weeks or so. But MNTA just made this breakout. Look at the volume coming in. So that is your final 3 you must see. I want to wish everybody a great trading day on Tuesday. Happy trading, everybody.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below. Leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.